Chuck Carnevale. I'm the Chuck in the Markets Up Chuck, and today I'm blogging about Medco Health Solutions, the leading pharmacy benefit manager in the nation. Also has the largest mail-order pharmacy operation. The reason I'm doing this is because here's a company that really has gone through this recession almost unscathed. Their business is really not very reliant on the economy as much as it is demographics and the fact that they are perfectly positioned in the political landscape right now, because what this company really does is help lower the overall cost of health care. And therefore, politically, demographically, and also economically, this company is very well positioned. And the reason for talking about it today is simply this. I've always said it's a market of stocks, not a stock market. And here's an example of a company that's gone through this recession, as I'll show you here in a moment, extremely well. They just reported earnings up over 25%. They raised their guidance for 2009. And even when everyone's talking about all the doom and gloom in the economy and so on, here is a company, a very high-quality company, in my opinion, that has done very, very well regardless of what's going on in the economy. And I think it is an excellent investment choice, as I'll be covering here in a moment. The main point is, though, is to be discerning and not get caught up in all the hype and the hysteria or the doom and gloom that we have, currently. In the late 90s, it was hype and hysteria. More recently, it's been doom and gloom. The key is to build a portfolio one company at a time, and I think Medco represents almost a poster child for doing that in today's environment. So using our fundamental analyzer software, let's take a look at Medco from the fundamentals. This company, by the way, was a standalone company for many years, and I actually owned this company years and years ago, and then it was acquired by Merck. And then in August of 2003, Merck spun the company off to be a standalone company. As you can see, since that time, Medco has, performed extremely well. Their earnings growth has been 22.3%. Their earnings have gone from 86 cents a share to 95 cents a share to $1.03, $1.15, $1.66, $2.11, and now they've kind of tightened this up, around $2.74 for this year, and they've actually increased this guidance a little bit. It might be as high as $2.75. The black line here, of course, is the stock price. You can see the stock price followed that very well. I want you to notice that there was a period where it was overvalued. This, black line or green line or blue line, whichever you choose. There's actually two lines here. One's the normal PE, and the other's the earnings growth rate, and you can see they're almost the same line. The point is, there was a time when Medco was slightly overpriced, so it did have, some damage to its stock price in the debacle of 2008. But as you notice here, it's held up very, very well, and it's actually trading, very close to its all-time high, even in this, very depressed market. And they just reported, very strong earnings, as I mentioned today. So as you can see, the company has a great operating history. As usual, that operating history turned into great returns for shareholders. Owning this company since it's been, reinstituted as a public company, or August 29, 2003, through yesterday's closing price, $100,000 would have grown to $384,000, almost $385,000. That's a 25.6% compounded annual return during a period of time, roughly 6.5 or 7 year period when the stock market would have actually decreased in value by 0.5% compounded, turning $100,000 into $96,000. So we have an excellent track record for a company that's gone through the recessionary times extremely well on an operating basis. I'd like to turn to the future now. The consensus of the leading analysts as reporting the first call, which there are 22, are expecting this company to continue to grow going forward at 18% a year or better. I like to say 15 to 20%. That means that around 20 times earnings, Medco is not extremely cheap, and it's very, very attractively priced for the long run when you consider the quality of the company and how well it's actually performed in this recessionary environment. This company has a very, very bright future. It's politically well positioned, it's economically well positioned, and as I mentioned, demographically well positioned. As you can see here, by adding cash flows to their chart, this company generates very, very strong free cash flows, higher than their earnings actually. It's trading at a very attractive price to sales ratio, and it's just one type of company that if you're willing to look, you can find really good investment choices even in markets like we had recently. This is Chuck Carnevale saying thanks for listening. Look forward to talking to you again tomorrow. I hope you enjoyed today's presentation on Medco.